The 10-year, 7-year, 5-year, 3-year, and 1-year notes were all inverted with the 3-month T-bill today, yet they're telling you everything is okay and there's nothing to worry about. It's Tuesday, June 18, 2019. So, are we getting a rate cut tomorrow or are we not getting a rate cut tomorrow? Please comment down below. I'd be very curious to know your prediction. I believe we will not get a rate cut tomorrow. I believe the rate cut is coming in July, but there is a possibility that we could see a rate cut tomorrow. I'm going with July. Let me know what you think. Please comment down below. Who benefits from these low rates? It's certainly not going to be you. It's not going to be me. It's not going to be the middle class. It's going to be the stock market. And it seems so obvious that they're doing everything to help the stock market, but it doesn't seem like they're trying to help the economy. And there's a big difference between the stock market and the economy. Yet so many people gauge the economy by looking at the stock market. I believe this economy is signaling a massive recession. This economy, to me, is signaling big problems. They do not want negative signals in the stock market. They're doing everything they can to prop these markets up and to keep these markets going. They got to keep everybody in the game. They got to keep everybody in the illusion, everybody brainwashed, because as people are witnessing the economy breaking down, the global slowdown that we're witnessing take place, everybody believes that, their hedge funds, their 401ks, their pensions, all tied up in these markets, that everything is going to be okay. And that as long as the Dow Jones ends up in the green at the end of the day, everything is okay. The economy is okay. Even though with our own two eyes, we can see that the economy is not okay. The economy is giving us signals that it is far from okay. And they cannot prop up the economy like they can prop up the stock market. And they're doing everything they can to keep this thing going, because when they can no longer keep it propped up, America is going to be in a land of chaos. When people realize that their retirement funds, their 401ks, their pensions are all in big trouble, all tied up in these markets, that the whole thing was basically a giant Ponzi scheme. They've been lied to, they've been robbed, they've been cheated. There's going to be big problems here in America. And if you can't see the writing on the wall right now, I don't know what to tell you, but they are running out of tricks. These low rates are just going to kick the can down the road. It's going to benefit corporations. You'll see more corporate buybacks, more, these zombie companies that should not exist will continue to exist because of low interest rates. They are putting off the day of reckoning. They're losing control of the economy. And at some point, they're going to lose control of the stock market. And when this happens, you're going to wake up one morning to a major nightmare here in America. And if you're not prepared for it, you're going to be in very, very big trouble. We have an inverted yield curve. Housing starts down. Manufacturing down. Shipping down. We are witnessing a retail apocalypse. 7 million people have defaulted on their auto loans. 30% of people with student loans have defaulted. People are actually leaving the country to get away from their debt. These are major signals, just a few. These are just a few. Yet you're being lied to that things are okay, that you shouldn't be preparing, that you should actually be investing in these markets. Now, I'm not giving anybody investment advice. I'm not a financial advisor, but I see so much brainwashing going on. The Titanic is sinking, okay? And they're still playing the music, and they want you on the ship while it's sinking. This thing has hit an iceberg, and every one of you out there better be preparing right now. Let's go over some more reality and some more facts. Great article today on wolfstreet.com, who bought up nearly $1 trillion of new U.S. government debt over the past 12 months. Over the past 12 months, foreign investors added $253 billion to that $1 trillion. The rest was added by American institutions and individuals, totaling 876 billion of treasuries, bringing that total of treasuries to 7.64 trillion. U.S. banks hold 500 billion of treasuries. Other U.S. institutional holders include pension funds, mutual funds, hedge funds, corporations. Individuals hold a portion of treasury securities either directly or indirectly through bond funds, pension funds, through brokers, and American institutions. My question is, what happens if this debt cannot be paid back? Now, I know people will say that could never happen. What if it did? What if it could not be paid back? We look at who's holding this debt. Federal Reserve is holding 2.1 trillion. U.S. government entities, 5.8 trillion. Foreign holders of this debt, 6.4 trillion. The biggest holder of this debt is U.S. institutions and individuals, 7.6 trillion. You know, you really got to think about what would happen if this debt could not be paid back. Another story, shtfplan.com, 25% of Americans are worse off than they were before the last recession of 2008. This does not signal a booming economy to me. Here's another one. Housing starts slide in May despite plunging rates. Again, the writing is on the wall. Housing starts tumbled 0.9% month over month in May. This would be worse, okay? This would be worse if it wasn't for all the multi-units being built up right now, because this is where your Section 8, your low-cost housing, rentals, because we're going to see less and less home buyers out there, and we're going to see more people having to rent, as we're seeing more people having to lease cars because they can't afford to buy. People's lives are just becoming rentals. People are going to lease cars and rent apartments and rent houses and never be an owner. They're never going to be able to pay off their car. They're never going to be able to pay off their house. We are going to continue to see more and more people unable to qualify for a loan to buy a house, forcing them to rent. We are witnessing our country now where people are acquiring debt, not acquiring assets, where people have no net worth. They land up owing money. Most people, if they died today, would land up owing money, not having money to pass on to their family members. They would actually owe money. So we're the land now of debt. We acquire debt. We don't acquire assets. We don't acquire savings. We don't have emergency funds. We don't have anything put away. If you save money, you don't earn anything because the interest rates are so low. So you're forced into these markets to gamble, which most people are going to lose, and they're going to be wiped out. So we now live in this land of credit and debt, where nobody has a net worth. Very few people have a net worth. Very few people have assets. And now people can't even buy a house because they can't qualify. So they're not going to be able to have a 30-year mortgage that they're never going to be able to pay off. They won't even have that opportunity. They're just going to be renters. That's the direction. That's where we're heading. That's what we're in right now here in America. This is reality. This is unfortunately the reality that is becoming more and more common here in America. I know that there's a few people out there that are going to say, boy, this is doom and gloom. It's the same old, same old. Well, I want you to comment down below and give me the good news. Now, just because maybe you live in a small town of 2,000 people and your small economy is doing great in South Dakota or Montana or wherever it may be, that's great. But we're talking about this country as a whole, the economy here as a whole. It is not doing great, okay? The facts are the facts, the numbers are the numbers, but there are exceptions to every rule, and there are some towns across America doing well. And people will write me from some tiny town with 5,000 people in it, telling me that their real estate market's doing great. Well, that's wonderful, but the real estate market as a whole in America is down. And there's an article today on CNBC for all you people that will just say this is the same old message, doom and gloom. This is more news, just came out today on CNBC. A key manufacturing gauge just saw its biggest 1-month decline in 18 years. The Empire Manufacturing Index, which measures activity in the New York area, fell to negative 8.6 in June from 17.8 in May. This is the biggest slide since 2001. This is the newest fact, the newest reality of what's happening in the economy that just came out today. And that's telling me that things are not as good as they have been telling us. But to those people out there, tell me, what is the good news? I could use some, because I continue to see nothing but very, very negative news, very concerning news to what is happening to the U.S. economy. Not the stock market, because that's all propped up and controlled, but they're losing control of this economy right now, and they can't hide it. And when they lose control of the stock market, which they will, because they're running out of tricks, we're getting very close to negative rates. We're getting very close, and we're getting very close to QE4. And after they've used that bag of tricks, what's next? After they've devalued the US dollar with more QE, after we've propped up this market more with cheap money and cheap rates, are we going to zero? Are we going to zero? Are we going negative? What does that tell you about your economy? Is it that good? Why are we forecasting a rate cut? Is it because the economy is doing so well? Typically, in a booming economy, you raise rates. When an economy is struggling, you lower rates. And what happens when we're at zero or near zero or negative, and this massive recession, which is not going to be avoidable, when this massive recession hits America, where do we go from here? How much money can you print? We cannot buy ourselves out of debt, ladies and gentlemen. We should have learned that in 2008. Nothing got fixed. I'm going to wrap this video up. Before I go, a couple quick words. Remember, the decisions that you make today are going to affect your future. You know, when we talk about consequences, and we're going to see major consequences in this economy because of the decisions that have been made, because we don't see instant consequences today, people think that the consequences aren't coming. The consequences are coming because they always do, sooner or later. The poor economic decisions that America has made is going to have unavoidable consequences that every one of you out there is going to be affected by. This is why it is imperative that everybody out there is awake and is preparing mentally, physically, spiritually, and financially for what is coming. The consequences are unavoidable. This cannot be reversed. Things are going to happen here in America, and everybody is going to feel it. And I truly believe that if you are prepared, that you are actually going to have the potential to actually prosper in bad times. If you have tangible hard assets, if you've prepped, if you have security, if you're awake and you are aware that your environment can change, if you are mentally preparing yourself, you're going to get through this. And in fact, many people will actually prosper. And it's going to be a painful time for everybody, whether you're prepared or not, but it's going to be less painful for the people who are prepared. It's going to be a horrific, painful time for people who have no idea what I'm talking about, people who are oblivious, people who are completely unprepared. These people may suffer with their life. They may pay the ultimate consequences. So don't be one of these people. Be prepared to, and be ready to survive what is coming. If you don't do the right things, you will pay the ultimate price. God bless. Have a great week.